So again, let's go into the way forward. So we have clearly said we vote against this merger because we're not happy, okay, with how this has been going. We're not happy with the performance of the manager so far. I think that's fair game. That's right. That's our right to do that. Somebody invests in our fund and they're unhappy about our performance, you just fire us. It's just normal, okay? It's nothing personal. It's normal business conduct. Yeah, we think the current management, they have not provided us and every other unit holder with a stringent and with a clear path forward, except applauding to this subpar merger and except telling people, oh, just vote yes, just take it, you'll be part in a bigger REIT and everything is going to be fine. We don't think that is a thorough and detailed analysis. And why they are cautioning unit holders to take the statements of Quarz and Black Crane Capital, lightly or to question those. We think, okay, it's fair to do that, but it's also fair to question the statements of the manager. And as such, we have said what could be the way forward. If that merger was to be voted down by all unit holders, by the independent unit holders, it's quite clear. We have said, we came out with a letter that we think there should be a fresh and independent manager. Just to clarify, we're not planning to buy the manager, the existing manager. We think that would be quite a poor investment for us to do that. We would set up a fresh manager, or technically, the technicalities will have to be cleared. It would be potentially the trustee who would have to do that and not ourselves. And that manager should be internalized later on. So it would be owned by all Sabana unit holders and for all Sabana unit holders, including ESR, obviously, but everybody else too. There's precedent of that. NetLink Trust is ranked #1 in the governance index for trusts. I think that shows you there has been a lot of commentary. In general, there's potential corporate governance conflicts that can arise from the current REIT and REIT manager model. NetLink has shown that can be highly sort of beneficial to all unit holders. We calculate again on our own assumptions that we could increase, we could see a DPU increase by about 7.5%, technically by eliminating those fees that are currently paid to the ESR people. And
I think this part, maybe I can interject, because
yeah,
they actually have they have actually tried to ask, like, where did we get this $7.5 billion from? So this 7.5% is actually about 2 million. So basically, this is basically of Sabana REIT managers' financials. So just want to say that in the year end April 2019, Sabana REIT manager basically made about above $2 million of operating profit. So basically, they collect about 4.5 million of fees, and then they pay for all the operating costs of hiring the manager, the compliance, and the CFO. And what is left, which is basically the operating profit, is actually 2 million. So this is actually where the figures that we got it from.
Okay. I think the important point is here that we believe that such an alternative manager, an internalized manager, is doable. Obviously, the merger has to be voted down first. After that, we would come up with another EGM requisition. We would propose that. Obviously, incumbents feel that that's a silly proposition, and there is no way that could ever be voted in. We actually oppose that view. We think there's actually a highly likely, or we're quite confident that this can be actually done, and that this is a straight way forward to create an independent and internalized manager. So I would say, I think we're not scared to bring that up. This has already been brought up before. Yeah, Sabana, obviously, as you all know, there's a lot of shareholders that have been basically in that boat or on the right since a long time. Yeah, so they remember the old times already, and they're all organized in forums and in chat groups, and they discuss that obviously heavily. But I think this time the difference is that we combined all together would have quite a sort of important voice to actually vote not only down that merger, but also vote in, basically bring a requisition to replace the manager. And I mean, it's clear that the incumbent manager would not like that, but I think that they have had a lot of time, you know, now to actually manage Sabana REIT to the fullest and efficiently and to the fullest satisfaction of their unit holders, because that is, again, to make it clear, their sole purpose, okay, and their only job, okay, to manage that REIT properly. So unit holders are happy. And they haven't done that, in our opinion, yeah? And that's why we feel it's high time to come up with a different proposal. And by voting against the merger, technically you open up the opportunity or the possibility for everyone together to bring in their own independent manager, which is in the interest we feel of all unit holders. Again, after that, what happens next? I mean, just to make that very clear, because that's a frequent point that I just find a bit funny. And to make it clear, just as every other unit holder, we are also shareholders, okay? We invest into the REIT to participate in the success of the REIT, yeah? It's quite clear, yeah? But that everybody else is doing that. And now, after that, we're not looking to actually steal the manager or to benefit from the management fees. No, we have clearly stated a fresh manager will be owned by all unit holders. Yeah, it's not our intention to have a manager or anything. We're not REIT managers. Yeah, we're fund managers. Yeah, we leave that job happily to highly qualified real estate professionals that maximize the efficiency of the portfolio. After the vote, yeah, if an independent internalized manager would come to be, yeah, we will have a 5-point plan, which you can see here. We would immediately start on executing on the plan, which the current management has, in our view, failed to do so far. We want to increase the dividend yield, obviously, the DPU. There are certain cost savings through the internalization, obviously, of the REIT manager. The 151 Lorong Chuan completion, obviously, and the retail component coming online will obviously lift up the DPU. We will try again to lower the finance costs. And we would try, obviously, to have the new manager buy, obviously, yield accretive assets in the future to actually really efficiently manage Sabana REIT's assets over the mid to long term. And we feel this 5-point plan is not something that is like unreasonable or anything. That's just a plan that we came up as independent unit holders that we feel that should be actually the job of the manager to do that. I think now it would be important to go quickly into the Q&A. You have all commented here.
Can I just make a comment about the?
Sure.
I've been watching some of the Q&A, and I think one of the issues that I guess people have some concern with is if they vote down the merger, what's next, and can we be successful at getting an internalized manager, or what other options are there, right? So I guess this is a fear thing that Sabana, the existing Sabana manager, has tried to amplify and play up to scare people into voting for the merger, because it's the only deal, and if you don't, this REIT's too small. I think there's some pretty simple answers to that. The first one, if this merger is voted down, it's clearly a vote of no confidence in the existing manager. The existing manager is under close attention and scrutiny from the SGX and the MAS. and needs to be very, very careful with how it manages these assets on the go-forward basis. And we would plan to pressure them to changing the board immediately. And that would be one of our first steps in parallel with the internalisation plan. So even if the internalisation plan didn't succeed because of the vote, for instance, we still think that ESR would be, or that the Sabana board would be under a lot of pressure to rejuvenate itself and bring in new blood to work things forward to maximise value. Secondly, there already is improvement under the surface, and you can see that in the third quarter operating results. Where utilisation of the properties is already improving. They've said that last half, the average debt cost was 3.8. It's come down to 3.2. That's going to work its way through the P&L. Even using Donald's numbers of, I think it was $2.1 million Harvard of income from the retail component at 151, you factor that in. Already, we're looking at a far improved DPU for the second half, which we think would show that their deal is break even at best and probably dilutive. And we just are absolutely astounded as to how, given property's a pretty easy business to forecast, and Donald's the man of excuses. I've never seen so many excuses come out of anybody's mouth in all my life. So how they can not, well, he plays the COVID excuse, but how can they not possibly give a forward view as to the DPU effects of this deal on unit holders? And they've just completely dodged it. And we think this is DPU damaging to unit holders. So if it gets voted down, what happens? Your DPU goes up. You've still got your 51 cents of NAV. You've got the potential for a much more independent manager, and at best, a completely independent manager that you get to vote on. We see very, very little downside to voting this down. You can already see there's two share prices started to dislocate a little bit, might give you a feel for whether it might trade in the short term, but we plan to stay active and stay in with this. We're not in this to vote it down and then walk away. We have big shareholdings, we can't easily sell them. We're here for the long run to create value and get a proper outcome. And our target is we want NAV. That's what we want, and we're going to get it one way or another.
And I think one more thing as well, just to assure unit holders as well, this internalization plan is not one that we have taken lightly. We have actually have two legal teams working at this plan. They've done the organization, they've looked at what is required for the regulatory approval. We also discussed this with a number of institutional investors, the banks as well. And the answer, and you know, is very, very interesting, because the way that the Sabana REIT manager writes it is all about this trigger of control clauses. So they kind of imply that basically the banks will trigger these clauses because basically an underperforming manager is removed. So we'd like to assure unit holders that this is not the case. The banks back their loans. I mean, basically the loans that the banks give are actually backed by, first, the cash flow of the Sabana portfolio, second, the Sabana portfolio as well. So, you know, I mean, for them to say that basically they are actually the one determining the bank loan, so that's actually an extremely laughable thing. And the second thing, which you know they like to threaten, is basically that so yeah, you know, but we can still try to threaten and scaremonger. So to be honest, basically ESR and its affiliates are the biggest shareholder in Sabana REIT. I mean, if I put it in a very, very negative way, so they are the biggest shareholder in Sabana REIT. So basically, you know, if they want to blow up the whole REIT, in the worst case, who do you think suffers the most? So ESR Cayman is basically a listed vehicle as well. So and it also has public shareholders as well, which some of them includes the biggest pension funds and the biggest institutional investors in the world. So basically, the thing that we would like to ask them is that, so basically, are they trying to tell their investors that after being voted down for this really ridiculous merger, then they get voted out by the independent shareholders and lose 40 million in, or potentially 40 million in the manager. So they, and the third thing they want to do is basically they want to destroy more than 90 million of dollars they've invested in Sabana REIT by trying to scare the unit holders. So who do you think is the biggest losers if this whole internalization thing and the change of control interest thing doesn't go well? So, I mean, but before this, we've also already put in a lot of safeguards to make sure that this does not happen.
To go through the most important questions quickly.
So I think the first question is, do you think a change of REIT manager will improve the poor occupancy rates of Sabana? To be honest, what we view the situation is this, okay, so Sabana REIT has actually gone through a really tough adjustment period where you have a lot of the master leases expiring, resulting in increasing vacancy rate. And of course, we have the underperforming manager in the last 2 years as well. So what we actually see for Sabana, and this is also the reason why we got invested into it in the first place, both Peter and as well both Black Crane and Quarz Capital, is that we think we are actually at the light of the, or basically we are actually at the end of the tunnel. So going forward, what you can already see is that they are actually, and these levers are actually being executed already. So firstly, you have this retail component at 151 Lorong Chuan. And then right after that, right after the retail component is completed and you get this extra cash flow and the uplift in book value, the next thing that can be done is basically the redevelopment projects at 151 Lorong Chuan as well, where you can build 200,000 square feet of space, at $3 per square feet. So it generates a lot of income, and this space can be rented to master tenants. It can be custom built, and this generates another good stream of income again, and increase in DPU. And the next thing is basically the decreasing the financing cost and also increasing the occupancy rate. I think Peter has pointed out that, in just the last 3 months alone, you can see the sharp fall in the financing cost as well as the increase in occupancy rate. So we think we're at the end of the tunnel, and all Sabana's property are, plugged into these structural growth sectors, industrial, logistic, tech parks. Technically, this is leveraged onto the e-commerce space, and we think there will be a lot of demand for this. So we're actually confident, and that's why we are committed long-term investors. And we think that basically the quality, it's not really the quality of the REIT portfolio, but it's rather the manager, which is resulting in the poor performance. Yeah.
There's a question about one of the biggest fear-mongering things that the manager this time and in 2017 talked about was the triggers in the loan agreements, and as to if there was a removal of manager, that it would trigger a default on the loan. That would only be a problem if you had a manager who, was of such a low character that they chose to effectively burn down the house before you got to take the keys, right? So those agreements, those triggers in those agreements are very standard clauses. However, as long as the manager coming in is a sensible manager of, properly qualified and regulated, the banks are not going to have an issue. It's a complete furphy. It's a complete misleading, fear-mongering thing for them to be throwing out there. Properly organised, it's not an issue at all.
Maybe Avad, you want to answer as well this question, implementation of internal manager. Again, that loan default clause. Or Peter,
yes.
Maybe I think that's really pressing for a lot of people, I think, that are undecided.
Yes, I think the key thing appears to be that if it's the fear of getting stuck, which is that they vote this down and then there's not another transaction and it sort of drifts, if you like. But with committed shareholders like us, we can avoid that scenario. And ultimately, we have spoken to people about buying all of the assets in the portfolio. There is interest out there. Bidders don't like to walk into hostile situations, potentially upsetting competitors. So when this is voted down, the manager has to start with a clean sheet of paper and look at all options. It's quite clear to us that since 2017, they had a short period of looking, the manager had a short period of looking for potential solutions. They were hamstrung because Vibrant was the manager at the time. Vibrant wanted a high price for their management company. again, conflicts of interest. So this vehicle has suffered right from when it was born with conflicts of interest with its manager, first Vibrant and now ESR. So there's never been a position where the manager of this REIT has been able to go out to the broader market and say, where is the interest for these assets? And who might we merge with when they haven't had a conflict with a management company that has divergent interests from the unit holders. And so when this is voted down, that will then be able to be done. And given, yes, it's not the A grade portfolio, but it's a very good portfolio. It's a very large portfolio. It's in a market, being Singapore, where there is strong appetite for assets and it's hard to get assets. Industrial property is at a very attractive class at the moment because it seemed to be protected from, actually benefit from COVID with extending supply chains, etc. So we think, this is don't give up. This is an attractive investment proposition for a lot of people, is what we've said publicly. And all we now need to do is to get a decent, half decent manager, and we well suspect this manager might be able to operate the assets properly, but it's been the big picture, how they've negotiated this merger, how they've failed to refinance the portfolio property, they've held on to Sharia compliance too long, et cetera, et cetera. So we don't see, we think doing this deal locks in the downside, and we think there's only the upside from here. I think there's also some fear around, well, do we end up rudderless for a period of time? And again, we would hope that the existing manager is mature and grown up about this and will provide a sensible transition. And so the key for us is first changing the board. If you start at the top, start with the board, who are strongly independent, properly independent people. They don't necessarily need to be property experts per se, though it helps, but they need good corporate governance, investment management, fund management type of expertise. Start with them. They can then use the existing management team even as a transition team, or we hire a team ready to come in. But in either event, they review the management, assess the management, and change if necessary. So that would be our approach, is to start at the top.
And I think there's one part about what is the cost DPU impact of internalizing the manager. So I think, as Jan and Peter have said, that we are basically not buying the manager from ESR, so it doesn't matter how much they paid for the manager. We're not buying it, we're setting it up from the ground up, or basically the trustee is setting it up from the ground up. And the cost of it will be minimal. I mean, compared to the fees of about 4.5 billion you pay a year, I mean, it's going to be around or even slightly lesser than basically the ballpark. And I mean, that's also very, very laughable when one of the questions to us was that, oh, look, it takes $1 million to put up the base capital. So I mean, we wanted to say, look, we pay you 5 million. The REIT pays you 5 million a year, pays the current REIT manager. The REIT can afford 1 million as the base capital of the company. And the DPU impact of internalizing the manager will be positive. Like as we have mentioned, basically all the profit which the manager currently makes will basically be directed back to the unit holders. So this is where you get this immediate 7.5% increase in DPU. So technically, the interesting thing is, once all of us vote against this merger and it succeeds, the slogan we will tell you when we organize the internalization manager vote is, do you want to vote for more money in your pocket, or do you want to vote for less money in your pocket?
The other thing, there's one question here that with an internalised manager, there is no fees being paid externally. Then getting the manager to act in the right way is all around management benefit incentivisation, so the right salary packages and bonus packages.
For unit holders as well.
Actually, there's a question here, Howard, I should answer, just saying what does an internal manager really mean? What an internal manager really means is that the REIT becomes just like an ordinary company. So the people that manage the assets are employed by the company. And so their salaries and expenses become an expense of the company or of the trust. So in this case, because the properties are held by a trust and there has to be another and the employees have to be employed by a company, you have the trust owning the management company. So therefore there is no profit, or any profit generated by the management company goes into the trust. So in effect, it's just a cost basis. So therefore there is no fees paid. There might be fees paid to a property manager, as in Jones Lang or someone like that, but not to the fund manager. But there's no fund management role where there's an external fee paid. So all the costs of running the REIT are internal. Then the REIT structure simply becomes it's a tax and distribution structure in effect. And this is how REITs are operated in a lot of other markets. So in the UK, a REIT is just a company and it's just has a particular tax status. In Australia, it's like Singapore, but they have this internal structure where the manager and the trust both trade together and as a stapled security on the stock exchange. So that's what we mean by an internal manager. So under that scheme, there is no ESR would lose their economic interest in the manager. We would not get that economic interest. The unit holders, or other than our pro rata share as unit holders, the unit holders would get the benefit of that economic interest that is currently being extracted from the trust.
To disclose the parties we're talking to, we won't do that. We will do that at the appropriate point in time. Yeah, it's quite clear, you know, if there was to be an internal manager, you know, this will not be us, you know, behind that. Also, people are asking, yeah, will you be on the board? Will you do this? Will you do that? I think the first point is to express to the current manager and to the acquiring or the merging party, yeah, that we do not agree to the proposal in its current terms, and therefore we voted down. Yeah, and if that is voted down, okay, you can trust in us, okay, while we are shareholders, exactly like all other unit holders, that will do whatever it takes, yeah, to come out as quickly, as transparently, and as good as possible with next steps. You've seen we're very, very transparent. We send you emails to everybody who subscribes and who is interested. Yeah, and we're very happy to talk to anybody who has a valid and sort of fair and transparent questions to us, and who is also willing to actually show their name there instead of writing anonymous questions. I mean, you know, next time just sign in with your names, you know, then we can also see who is asking the questions. But on a side note, I think we're confident to do that, and we will disclose the parties at the appropriate time and not before anything would happen to another guy. Says, who are the bankers you have spoken with? Please understand, you know, at the appropriate time, we could then also disclose that, because it's also then in the interest. And I think it would be now a bit too early to do that. I think that's quite clear. We've put out our intentions. We've tried to do as an easy and comprehensive analysis of the situation as we can. Okay, and I think afterwards we will come out with another round of what's next. And just to be clear, you know, there's a number of highly qualified candidates in Singapore for such roles. Okay, Singapore has a huge talent pool of people, and we are highly confident that we can find the appropriate personnel if there were to be an internalized manager.